Steve, we touched upon something earlier that I think is kind of key to all this, which is there are a lot of provisions in the tax code that were enacted in 2017 that were individual, tax cuts that applied to individuals that are scheduled to expire at the end of 2025. And it seems to me that a lot of the answer to that question about whether taxes will go up and how will you know has to do with what happens, not just with what President Biden and Congress may enact this year, but what happens after 2025. So could you talk a little bit more about how those provisions and what their future has to do with this question about whether people's taxes are going to go up in the future?
Yeah, sure. I mean, so the problem from the president's perspective, I mean, he basically in his campaign said, I'm not going to raise your taxes. The question is whether he's going to allow your taxes to go up and whether people view those as two different things. So in 2017, Congress enacted a fairly significant tax change. In addition to reducing the corporate income tax rate, they reduced all of the individual income tax rates. So we have a very progressive system. The bottom rate's 10%. It goes up to 37% currently. And all of those rates were reduced from their previous level. In addition to the lower tax rates, they doubled the standard deduction. And then they enacted a $2,000 per child tax credit. It was previously $1,000. So essentially the 2017 tax cut reduced income taxes across the board for everyone, of all income levels. And those tax cuts will all expire in 2025. Now, in addition to the tax cuts that are current law that expire, President Biden has enacted a larger child tax credit. So in addition from going from $1,000 to $2,000, which occurred in 2017, this year, President Biden has increased the child tax credit. So if you're a child under the age of 6, it's $3,600. And if you're between 6 and 17, it's $3,000. Now, he made that effective this year. The House bill would extend that for an additional year. So, from a taxpayer's perspective, this year and next year, they're going to get the benefit of all of the tax cuts that were enacted in 2017, plus they're going to get the benefit of this larger child tax credit. Now, the question is, if Congress does not continue to extend those tax cuts, both the child tax credits and the underlying lower tax rates and the larger standard deduction, it is undeniable that relative to the taxes you're paying this year, if those tax cuts expire, your taxes are going to go up. So the question becomes, does that violate the president's pledge? Because he can say, well, I cut your taxes temporarily, but I didn't keep it permanent. And these tax changes that existed before I became president, they just expired just as they would have anyway, even if I'd never been president. So, he may sort of take a hands-off approach and say, well, I didn't do any of those things. They just happened. That was
it's kind of
law.
like, if he is only tagged with policies that he's enacted or policies are in the tax code. One other part of that occurs to me as you're talking about that is that those things expire at the end of 2025, and there will be a second presidential term. So it'll either be a second term for the current president or a new president coming in. So that'll be a campaign issue. We'll be talking about that in New Hampshire, I guess, during the run-up.
So one thing I want to say politically, if the president and Congress allow these cuts to expire, it is going to be seen as a tax increase. It doesn't matter how the president or congressional leadership describe that. That's just the way that it's going to be perceived. So the dilemma is, if you continue those tax cuts that were enacted in 2017, obviously that would very significantly grow the amount of deficit addition into things like the Build Back Better bill and the infrastructure bill. But again, let's say politically that look in our crystal balls, and President Biden is reelected somehow in 2024, and Democrats retain control of Congress up until that time. If there's an agreement that those tax cuts are allowed to expire, it will be seen as a pretty dramatic tax increase. But from Biden's perspective, he's done. He doesn't have to run again. And so the consequences on him for doing that, if he manages to win a second term, would be less than somebody who would want to run again. So it could be that he's betting on the fact that by the time those tax cuts go up, people might be mad at him, but the consequences on him are not as bad, and you provide some more revenue to pay for some of the programs that you enacted